Hello, everyone. This is George Anton here, and I'm super excited to have this incredible gentleman here, Ryan Allaire. This gentleman has been, he gets everything accomplished. He gets everything done. And what I love about him is that whenever he learns anything, he's out there getting it done, and it's like nothing. And then he's leaping forward so fast. It is incredible. And I asked him to be on this call to share with you what he's doing and what's his mindset? What is it about him that makes him leap forward? But before we get into that, I just want to say welcome, Ryan. How are you?
I'm good. How are you, George?
Excellent. I love your last name. It's French, and yet you don't speak French.
No, none whatsoever. So,
I was gonna start by saying "Comment ça va, monsieur?" But okay. So, Ryan, can you share with everyone a little bit of your background?
yeah, so I grew up in Colorado. I went to Colorado School of Mines for my undergraduate degree in electrical engineering. After that, I went to work in Los Angeles for about 5 years, and then now I'm back in Denver. I work for a forensic sciences firm where I've worked my way up to manage our Denver office as well as our Texas office.
So, what's your official title there?
Official title is district manager. I'm not doing the forensic engineering as much anymore, but I oversee them all. So
I wanted you to say forensic engineering because everyone used to have this weird. I just interviewed Essie, and hers is a petrophysicist. So it's really
right.
interesting. We have people from all walks of life. So I love your background, and you're so specific when you're doing a part of your job. Looking at claims and all that stuff. Fascinating stuff.
Yes.
But anyway, so tell me what got you into thinking about even wealth building and finances and all that stuff.
Okay. Well, when I moved out to LA, well, first when I graduated college, my mom got me Rich Dad Poor Dad for a graduation gift. So I started kind of having an idea about passive income and making your money or other people's money work for you. And I went to LA thinking I was going to be living by the beach, as a 22-year-old single guy with a great engineering job. And then I learned a little thing about cost of living. And it was right before the bubble burst. And I, instead of being able to buy a place in Los Angeles, I was able to buy a few properties in Colorado and with my mom. And we partnered on those. And then the bubble burst. Luckily we had bought the properties properly and pretty well under market value, and we were able to hang on to them. But at the same time, I had a few friends who had bought places and they were struggling because they were doing like 40-year interest only loans with a big adjustment 2 or 3 years in or something like that. And then also I lost about half of my 401k that I had saved up pretty in the first 4 or 5 years of my career. So it was a pretty big wake up call for me of, yeah, this is all well and good when the economy is good. And then I kind of taught me that I needed to learn more about my own personal finances.
And so was that the trigger that really got you into to find out about us? And when did you become first? When did you join finance? I'm curious. I can't remember.
Oh, so I guess I joined finance and your group probably about 2 years ago, in about 2016.
So walk me, what was happening right before that? I'm sure you've
Okay.
done other trainings, and what were you seeking? What were you looking for at that point? What
Yeah, so right before that, I had my first big promotion in the forensic world was to relocate to Dallas, and I was put in charge of an entire office down there. So it was a pretty big office, and I was working a lot of hours, and uh, got to the point that I had been focusing on my engineering career a lot and growing that, which was going well, and got to the point where I realized I can't sustain doing these hours and dealing with kind of all the emergencies that come up when you're managing 20 some odd direct reports, and realized that there was a shelf life on it. And so I decided, hey, I should probably start looking back and being more active in my real estate stuff and investing. And came across one of your courses, took it, and decided, hey, this stuff makes sense to me. so that's kind of what started it all.
What was it that really um, uh, that you felt made you think this is the right thing? I mean, because we obviously have quite a bit of training, especially with Finance Academy and investing level. We have different trainings. What was it that made you think this is the right path for me?
I think the big difference between the finance trainings and the other trainings I had taken is the other trainings kind of, uh, I mean, not to just put them all in one basket, but it was teaching you how to flip houses or teaching you how to get another job, more or less, in my opinion. And at the time I was at, where I had about 10 properties at that point, and this training it was more big picture and started tying all of the little pieces of knowledge that I had learned throughout the way, um, tied them all together for us.
Excellent. And so when you joined finance, you said 2 years ago. Let's discuss the non-investing level. Okay,
Okay.
that's Finance Academy. We have quite a few building blocks there, and walk me through what you thought, and when you start implementing these things, what are some of the things you noticed?
I think the biggest thing is the simplicity of implementing them. Initially, when you're looking at it, or some of the concepts can be a little intimidating just because of my lack of knowledge, or hey, I hadn't thought of it or heard of it that way before. But then once you kind of just start looking at it, it really does. Once you set it up, take and some of them it's half an hour, others it's maybe a few hours, or over the course of a couple days or a couple weeks. They're all pretty well self-sustaining.
So I want to expand on something you just said there, because that's a huge thing. For most things out there, when you're getting some training, what's given to you is simple, but the implementation is hard. With this, it's completely the opposite. So with this, it's hard to understand because it challenges everything we know about finance, and yet it's easier to implement than to actually understand it. Because the understanding part is like, why does this work? It doesn't make sense. Even though we're giving them all the spreadsheets, we're giving everything. That's been the biggest challenge, is saying, this is incredible, I understand it, but why does it work? It's so interesting. Can you expand on that? Because that's been the ongoing thing here.
Okay, yeah. So, and I think one of the first courses I took, way back a couple years ago, was dealing with loan constants and stuff, and the spreadsheets and quick analysis. And as an engineer, maybe it just clicked with me more, and maybe that's what turned me on to it all. But it did take a few times of, okay, you can see the numbers, the numbers don't lie, but then it takes a little while to process it and figure out the exact concept behind why does it work. And sometimes I would just take the numbers and be like, okay, well, I may not understand it all, but the number, the outcome's correct, so let's just do it. And it takes a few, going through some of the trainings or going through some of the modules a couple times to fully grasp the entire concept. If I have grasped the entire concept, I'm sure there's more Easter eggs out there. So
Excellent. So let's talk about the what are some building blocks that you've implemented, and yeah, can you just share some of them?
yes, so probably the biggest ones, or the ones that have had the most impact for me over the last year or so, is the master sweep account. I was able to implement that pretty easily. I started a family bank with my girlfriend and I was lucky enough to be in a position where I can fund an insurance arbitrage, IUL policy, and then um, just the picking the right mortgages and that stuff when it comes to refinancing some of my properties. And I just bought a new home, new personal residence a few months ago, and so knowing what to look for and knowing to look for the loan constant versus interest rates, and being able to talk to my mortgage broker and bankers in terms that were kind of more on their level, really helped out a lot.
So one of the things, so there's a class that you haven't taken yet called Hacking the Financial Matrix. And with that, what you just did, so you followed, like one of the things you touched on there is the mortgage management system. So a lot of these building blocks, we have you implement certain things, we give you the numbers, but there's an underlying reason that's even more powerful that you learn at the Hacking Financial Matrix, which is shifting purchasing power from bankers to you. And by you structuring everything, the mortgages that you're talking about, to be as low risk as possible, because what most people don't realize, buying a property is the biggest investment most people do. And having a big mortgage is one of the biggest things. And yet the mindset out there is completely incorrect about how to structure certain things, but also how powerful these things are. So you have essentially set up your personal system to transfer purchasing power from the bankers to you. And I know it sounds crazy right now, but let me go back to mortgages for a second. What would you say to people that are getting a regular mortgage versus what's being out there? Like what a lot of people are telling you to do?
Yeah, so I actually just was having a conversation with some friends where they decided they wanted to have their house free and clear as quickly as possible. So they were doing a 15-year mortgage, and because that was the quickest they could pay it down. And it was just kind of eye-opening or very impactful for me, just realizing how much in the last couple of years, how much knowledge I've gained and understanding of why that doesn't make sense, or why it wouldn't make sense to me, and how I would really want to structure their mortgage for them, kind of. So
Yep.
So that was a big thing. And then also just looking at loan constants, whether it's with my own personal property or with my rental properties, of what is the risk? What if something does happen? What if I do get laid off, or if cash flow is a struggle, or we have a big expense, or need to maybe cut our expenditures for a few months. And just the added flexibility that we have with that is pretty huge, that no one ever taught me before. So
I'm going to expand on that for everyone listening, so that they have some context. So there's regular debt, which is bad for everyone. I mean, regular debt, the bad debt. And then there's the right type of debt that can really help you leap forward. And so I'm going to just touch on a few things there. And Ryan, jump in if there's anything I'm missing, but just so people know, number one, the right debt, and what we talk about what's called strategic debt, is debt that has the lowest, what's called loan constant. And that's not necessarily the lowest payment per se, but it's the lowest payment relative to your loan amount. The second thing is the amount of debt. So you can't just have 100% debt. And a lot of people talk about just get 100% or as much debt as possible. One of the things we measure is every asset can only carry so much debt. And you have to know that number. And so that's the maximum you can get, or lower, but not more than that. The right amount of reserves. So there's two types of reserves you have to learn about, primary and secondary. So a lot of these things are really just part of what we call the right debt or strategic debt, where you make the whole financial system work for you. Ryan, do you want to add anything to that?
Yeah, and that was actually, the right debt and the amount of debt has been huge for my portfolio. And, and working with my mother, one of the other reasons that I've been getting the trainings and my knowledge is my mother, who I have some investments with, wants to retire soon. And so it's going to be, I'm going to have to step up and, do a bit more of the stuff that she's been doing. And, the trainings that we took together, when we first bought our properties, it was, if the money's sitting in account or, sitting in equity, it's not doing anything for you. You need to, refinance, pull out all the money that you can, or, they don't even mention reserves. They mention reserves as that's money sitting in account, not working for you. And so that was still that was a total shift in mindset, and a pretty big eye-opening epiphany for me is, oh, so maybe on this property I need to take, 10% less, equity on the loan so that I can actually have a stable property and make it work for me. So
Yeah, because one of the things is when the market starts going down, you have to know how to handle, because debt then ends up being your worst enemy when the market's going down. So you have to know how to manage the debt and how to deleverage if need be, and handle the effects of the downturn. So let's move on to let's look back 2 years. So now you've been in this program for 2 years. Looking back, what would you say? Can you tell us where you are right now in terms of financially, in terms of peace of mind, and what are the dots you can connect for everyone?
Yeah, so peace of mind, or my mindset is a lot more focused. Like I said earlier, I have a sense of the bigger picture and know where I want to be. For me, when I initially got into investing, it was kind of oh, this is my early retirement plan. I'm going to have this many properties and be able to retire when I'm 40 or whatever it was. That target keeps changing. But then for me now, it's, yeah, I have my investments, but it's the bigger picture is, hey, when I start a family, I have, I am shooting to have the luxury of time to spend with them and not just be, weekend dad, or, traveling like I was when I was building my engineering career. And I love international travel, and, working an engineering career, usually it's a week or two vacation max. And one thing I'd really like to do is maybe spend a month or two somewhere. And so the focus shifted from, how much money am I going to be bringing in to, what does this allow me to do as far as travel or with family, and, and then also just, through some of my volunteer stuff or working with the community. And, it was pretty sporadic when I wasn't, with traveling for work and stuff. And, just through some of the things I've figured out ways to give back, and through some of the trainings with you and certain suggestions, it's really gained traction, and I'm making a lot more significant of an impact, locally, and then with my family and, friends, and, the people I care about.
You're bringing up a lot of amazing things there. You're touching on, so part of our brand promise is, having a personal finance system that really supports the experiences, the relationships, and the impact that make you happy. And you are doing some amazing things in terms of significance and impact in your community. Tell me, how does that feel, knowing that you're making a difference in your community?
It's a lot more satisfying. There's, I won't say like purpose or giving me a purpose, but that is probably the best word to put it. Of, hey, I'm not solely focused on me inward of, hey, I want to make this much money, and I've set up the things to where I'll be pretty well off, and then when it comes to retirement time, or even just in the next few years, I'm pretty comfortable and not stressing out or having to focus on that stuff, to where I can actually give myself to certain organizations and give my time to certain things, and just enjoy it. And and it is doing some of the projects I've done, I walk away with much better satisfaction than closing a real estate deal or refinancing a property.
Absolutely, and that's huge. And so a lot of people might think, well, that to be able to do a lot of the finance stuff and a lot of the impact and relationships and all that must take a lot of time. And one of the promises is, especially for Finance Academy, is, I touched on it, is it doesn't take that much time to have or implement one of those building blocks. And what we tell people is 6 hours or less total. So that can be stretched out over a month, 2 months, few weeks, whatever they want it to be, and then placed on autopilot, and just becomes part of your life, and then you move on to the next one. Can you expand on the time you're spending on those finance blocks?
Yeah. So, when I'd watch the finance block, which would maybe take anywhere from half an hour to hour and a half. Sometimes I'd have to break it up, just depending if I was watching it during my lunch break or whatever. But the implementing part was pretty easy. Whether for example, Family Bank, it was okay. Go to the bank, open up a separate account that I'll use for my family bank, and that was it. So maybe half an hour of my time, and then a few minutes changing, my direct deposit from my paycheck to fund that, and maybe half an hour setting up the spreadsheets to track my loans out of that. And then I just recently incorporated one of my IULs and the cash value to use that along with my family bank and use that as my vault, which, getting the paperwork done is getting the paperwork and then kind of just coordinating the logistics of where money goes when, maybe 45 minutes to an hour. So
incredible. So that really gives you a lot of time to do some of the things you're doing right now with Impact. So for someone listening to this, thinking, this sounds like it's complicated or too good to be true or whatever, what would you say to someone, let's just say a friend of yours, saying, Ryan, this seems like it's complicated or too much work or too whatever? What would you say to them?
Let's see here. It's just completely worth it, doing it, of, taking the extra hour or two for, a week or, a month even, and just getting it set up now. Within the first month or two, I saw a tremendous impact in pretty much all of the things that I implemented, whether it was family bank or master sweep account or, just loan constant stuff of, getting a loan and, learning it and implementing it. Yeah, well, it takes time, and, a lot of people are busy. I'm busy, and I had to make it a priority. But when I did, I'm so glad I made it a priority, and now I don't have to think about it anymore, really.
Excellent. Now, one thing about you, Ryan, that I love, is that you always get things done. So you learn something, you don't let your mindset hold you back. You just go out there and you just get it done. And I really, it's so great to see that without drama, without anything, you get it done and you move on. You're like, what's next? And I love that about you. Can you share what is it that makes you just implement things much faster than the average person?
Let's see here. So I've done some leadership and performance coaching, which I guess helped with that. But I think what's the term is kind of, I think it's lick the frog, which is something you don't want to do, but you just got to do it, get it over with. And, and sometimes it's, I may not want to do that because I don't understand it, or, or it sounds complicated, and really I just kind of stop, break it up into pieces. And really it's, for something that takes half an hour to implement, it's pretty painless to do once you just make the time and make it a priority. And really, when I say make it a priority, it's making yourself and, your future a priority. So
excellent. Ryan, it's been great talking to you. As usual, it's such an honor to have you here. Any final words of wisdom you want to share with the world?
I don't know about wisdom, but I will say, with everything I've learned in finance and just the tremendous impact it's made for me and my family and, my girlfriend, and George, the story with that. And, a year ago, where her and her family were financially, it's, dramatically different based on, a lot of just, the simple things we've learned here. And so it's, I know we're all indebted to you, and, that's what I'll leave everyone with is, you may not understand it all, but it does work. And, we're all very grateful for it.
Ryan, thank you so much for your time. Really appreciate you, man. Take care. Okay.
All right. Thank you, George.
Yeah.